All right, let's bring in Peter Saleh, BTIG Managing Director and Restaurant Analyst, for a further dive. Peter, you know what? To me, it's interesting to hear what feels like is becoming a common theme among some of these restaurant chains. Higher prices are offsetting higher costs. We're seeing trade downs from low-income consumers. What stood out to you in the numbers that we got today?
Yeah, well, I think what stood out was that, McDonald's in the U.S. had positive traffic. Not many restaurants today have positive traffic. So positive traffic in the U.S., consumers are not necessarily pushing back on the higher prices, which are up about 10% year over year, despite all the inflation that we're seeing. Also, I think the second thing that stood out is their performance in the IOM market over in Europe was about 300 basis points better than consensus, about 200 basis points better than us. That, I think, allayed some of the fears around the street. There's a lot of concern that all the turmoil in Europe was really going to weigh down the same-store sales there. So I think on the top line, we just had those two really stuck out. Positive traffic in the U.S. and really good, strong performance in Europe, really driven by Germany. We saw Australia and France as well.
And I want to take a closer look here at those overseas markets. They noted that China not quite back to where it was pre-COVID just yet due to those zero policy lockdowns. They also noted that they might need to provide support in Europe for those franchisees. Looking to the next quarter, what exactly are you hoping that McDonald's does and steps in order to offset the price of food, paper, and energy overseas?
Yeah, look, I think they're just telling you that, hey, our franchisees, things may get worse over in Europe, and if we need to, we'll step in. They don't want to surprise anybody. We'll step in and we'll provide support like they did here in the U.S. during the pandemic. So I think they don't want to surprise anybody. So I think we'll likely see that. But right now we're seeing strength. Yes, there's a lot of inflation. But the consumers just are not pushing back. And I think, most interestingly, we're starting to see some evidence of commodities moderating here. We saw that yesterday when we spoke to Wingstop. They're talking about, kind of deflation in wings and in chicken right through at least the first quarter, if not the first half of the year. We think we're going to continue to see some moderating deflation as we go into 2023. And given all the pricing that the restaurants have taken, I think that could set them up for some margin expansion, which really nobody's anticipating at this point.
And Peter, you're saying the consumer is not pushing back. If we go into a recession, if you believe we're not in one yet, or we go into a deeper one going into 2023, where does that leave restaurants like McDonald's? Because it does seem that the lower income consumers is trading down, but yet it is a place where if you were an upper income consumer or middle income consumer, you would be going to a place like McDonald's during a recession. So is there really a downside to them if we go into a recession?
Well, look, I think if we go into a recession, define recession really. Look, if consumers have jobs historically in the U.S., when unemployment is low and there's job growth, restaurants hold up fairly well and their same-store sales and traffic hold up fairly well. So if we go into a recession where we start to lose jobs and unemployment goes up, that's when I think you'll see consumers start to push back. Bottom line is consumers still have to eat. So you're either eating at the grocery store or you're eating at restaurants. Grocery store pricing is up more so than restaurant pricing. So at this point, restaurants are actually providing a little bit more value than they have historically.
And generally speaking, Peter, we've been hearing from top executives that customers are more aware of their spending habits, like you're saying, in this environment. But that's not the case at Chipotle. At least that's what the CFO told Yahoo Finance. Take a listen here.
We don't think Chipotle is the brand that somebody's looking for a dollar menu or a bundled meal. They come to look for customization, real culinary, and they crave the food. That most customers get the same exact entree every single time, and that's what they crave.
Now, do you think consumers will continue to bear higher prices at Chipotle and the likes of it? And to add to that, do you think we might see some Chipotle customers coming to McDonald's?
I don't believe in that trade down of that consumer from, upper end fast casual to McDonald's to save 50 cents or a buck, if even that. I just don't believe it. I think consumers are going to, go after what they really want. Yes, within McDonald's, you are seeing some trade down from lower end consumers trading down to some value items from the higher priced combo meals. I don't think we're seeing any real evidence of that at Chipotle, of consumers trading down. Was their traffic down 1%? It's really not the end of the world. Some consumers may be opting to come a little bit less frequently. That is possible. But keep in mind that their traffic on a 2 and 3 year basis is up significantly. So, I don't see the trade down effect really hurting Chipotle at this point.
Peter, finally, we were just showing some of the other restaurant chains on the board there. When you think about where things are headed, in an economic downturn, who do you think offers the most value?
So in an economic downturn, I think restaurants that have, a value bundle. I think if you look at the pizza space in general, you can feed a family of 4 for around $30. I would tell you, I don't think you can do that from really any other restaurant. So in terms of overall value, I think the pizza space has the most value in an economic downturn, but we're not there right now. Consumers still have jobs. Consumers are still spending. We're not really in a consumer-led economic downturn. Maybe the overall markets are weaker, but that's not really translating into weaker consumer spending at this point.
Yeah, some important context there. Peter Saleh, BTIG Managing Director and Restaurant Analyst. Appreciate your time today, and our thanks to Brooke as well.